Yeah! Trader Round Up, everybody. It's your boy Kit. And we're waiting on the ICT Michael Huddleston. Fascinating morning. We got it. We got it. Yeah, I'm sending you the co-host, brother. I'm hoping you can just get that super easy, super clean. We'll see. Calm down. I got Pit Munch blowing me up. We'll see. Invite to speak through the co-host tag, but I don't know. Sometimes it's difficult for whatever reason. There we go. All right, hold up. Here we go. Michael Huddleston, the ICT. How you doing, buddy?
Good morning. How was everybody?
It seems pretty eventful all over X. Wow. Seems pretty
Shook the
eventful.
tree. I shook the tree then.
Yes, you did. I mean, the code and the mission here, I just love. It's so beautiful. But shaking the tree, I think you definitely shook the tree, my friend.
So I'd like to hear what everybody thinks about what I just taught and how it is to be implemented in their study and any questions they have going forward. And it'll also inspire me to continue on that idea this week, because everything's going to be pretty much lecture heavy, not analysis.
Okay. Let me get Pit Munch up here as my co-host. I got you. I'm just doing a couple admin things here as we bring some folks up. Conversation today is on chain of custody. We're looking at the Monday mentorship. It's being done today, right now. We're here. So the expectation, the thought is that you, the trader, will have some type of question in regards to these PD arrays, how they're mapped and or their chain of custody. So pretty please, let's stay salient to the lecture that was derived and completed yesterday. And let me welcome the co-host, Pit Munch. How you doing?
Can you hear me?
Yes, we can hear you.
Okay, hi.
How are
Yeah,
you doing?
I'm fine. I'm just I'm gonna get how you call it, pressing the ones and the twos on the back end here, and I'll be back in a few.
All right, sounds great. We have, who do we have here? We're gonna try some folks, and we've got Membrantham. Are you there, buddy? Membrantham, you've got the eagle. The harder you work, the luckier you get. I like it. Are you there, buddy?
Hey, Kit, if we can keep it moving, if they don't have a real quick connection, just move to the
Yes.
next one.
Yep. We'll keep it going, keep it flowing. I'll get a couple folks up here we're just trying to freestyle here. ICT Kane, you're in the house. You there, bro? Okay. It's X is undefeated. I tell you that. Okay, we got a hand wave right here. If you have a good question, if you believe you have a good question, provide some form of waving or something at me, and we'll go there. Light XBT, you there?
Yeah. Good afternoon. Good day.
Good afternoon. We have protocol, and we'd like you to stay on topic. Can you do that?
Yes, definitely.
Awesome.
Nice to meet everyone. Hello, Michael. Good afternoon. So today, the question on chain of custody. I watched the lecture series last night. I have a few questions. Mostly, first of all, I just want to say thank you for all you've been doing. I've been
Okay,
following
we
you
have
for
a protocol here,
years.
buddy. Let's
Yes.
stick to it.
All right.
Come on.
All right.
Where are you from? How long have you been trading? How do you engage with price? And then ask your questions to the mentor. Pretty please. Stay focused.
All right. I'm from Nigeria. I've been trading for 3 years, since 2023, from Nigeria. So the question I'm going to be asking today on chain of custody is, for my model, I've never used the new week opening gaps and all those things. So yesterday when I was watching what ICT did, how we drew the weeks, the daily weeks, and used them in grading, and how price was reacting to it. Also the relative opening hours, hours, the consequent encroachment of those. My question, let me just go straight to the question. The question I have is, what if I'm trading from 3 a.m., like the London session? What if I choose to base on the London session? What PDRA will I anchor? Do you anchored off for the afternoons, for the morning session in New York? Do you anchored off of consequent encroachment of the opening hours? What PDRA am I going to anchor off to watch how price reacts to if I'm trading London?
That was very hard for me to follow.
Yeah. What PD array? I need you to be a little bit more specific with your model.
All right. All
Okay.
right.
It's a very, very obtuse question, my friend. And
Can I
I'm
take
sure
a
you're
stab at
nervous.
it? Can I take a
Yeah,
stab at
go
what
ahead.
I
Go ahead, Mike.
think?
Go ahead.
And if I'm wrong, then just try to do your best to go through what you were doing, but try to do it with less words. The the target session you're trying to trade is London session, correct?
Yes, that's right.
Okay, and you're trying to ask how the things I've been showing with grading specific things and using the fib for that grading process, and you're trading only London as an interest. What would you,
Yes.
as ICT, using this stuff, what would I anchor my fib to do some kind of a grading process for determining where the PDRA is formed?
Yes, that's all I wanted to ask. Yes, correct.
Okay.
Thank you.
All right, first, what you're going to do is you're going to look at whatever the opening price is at midnight Eastern time. Are you trading Forex or are you trading futures?
I trade CFD or Nasdaq CFD, US Tech.
Okay, so you're trading a futures market, but it's a composite of
Yes.
the CFD
Yes.
market. Gotcha.
Yes.
All right, so you want to know where you're at in relative terms to the opening price at midnight. So if you're going to be trading London, it's been a couple hours since midnight in Eastern time of the U.S. And you want to look at whatever range is there, and if there's any specific sell-off that took place, there's like a SIBI, and you can anchor to the high of that if you're bearish. Now, none of this exonerates you from the responsibility of having a strong determination of where it's going to likely go. So London tends to have its little trend that it runs, and then it leaves something. It usually leaves a low or relative equal low, or it leaves a high or relative equal high. And they leave those in place for the New York session to
March,
run.
April, May, June, July.
Sorry. We had someone unmute there by accident. Please continue, Michael. Can you guys hear me? Are we there?
Yes, I can hear
Yeah, I
you.
can hear you. You're here.
Sorry, we had someone unmute themselves. We took care of that.
Can you guys hear me now?
Yes, sir.
What was the last thing you heard me say?
You were talking about midnight and you were talking about any array that could happen. And you were specifically referencing a SIBI and you were prefacing the conversation that you were going to have in regards to a bearish PD array off of or after midnight.
Okay, so again, the assumption is you're looking for a swing, and are you trying to hold into the New York session, or are you just trying to get your trade in London session by 5 a.m. Eastern? You're done. Is that what you're trying to do, or are you trying to go a little bit further into the morning in New York hours?
Either ways, if price offers me to wait till New York, I'm fine. But I
No, because
don't.
you're giving me way too many things. Because if you're expanding it, then I'm gonna
Okay.
have to give you more detail. So if you're just trying to get like a scalp or a small little setup that's in London between 2 o'clock Eastern to 5 a.m. Eastern, if you're looking for something that's going to occur in there, there's rules and things that's going to apply to that. But if you're trying to go into the New York session, then you're going to have to include a little bit more information and more steps. So tell me what it is that you're actually trying to do right now. What's your model trying to accomplish? Are you trying to get 20 handles, 50 handles? Like what are you aiming for?
Just something to trade and be done with before the New York session. That's the majority. That's what I aim for majorly.
Right, so let's call it your scalper for London. You want to get a little bit of a run. Is 25 handles to 30 handles, is that a fair target for you to feel comfortable with?
Yeah, that's perfect.
Okay, 25 to 30 handles in London. You got to look at where you're at in the grand scheme of what's the daily chart doing? Is it drawing higher? Is it drawing lower? We've already covered all that stuff. So I tell you what that is each week. I'm not going to do it this week, but I've been doing it for months and years at a time, telling you where I think it's going to go in a higher time frame. So just keep borrowing that experience, but use what I'm going to show you here. If assuming we're bearish and we think that the market's going to draw lower on the daily chart, something maybe the weekly or the daily is indicating that it's likely to get down into a lower level, and say it's about 150 handles away. You know you're not going to get the full range given to you just in the London session. So if you're looking for 25 to 30 handles, that's a fair run. Midnight Eastern time, that opening price, you got to know where you're at. After that happened, that price is printed, we have the European session and then the beginning of London session. So that's 2 hours in the US time that we've already booked price. In that process, did we run up to take out Asia high or a previous afternoon session high? Preferably, that does happen. If it doesn't, and we just drift lower during those first 2 hours going into the European changeover to London Open at 2 a.m. Eastern time, when this forms, then you're going to look back through the range that took place from the opening price at midnight Eastern time down to the lowest low that formed prior to 2 a.m. start Eastern time London session. If there's a SIBI in that portion of price action, and again, this is assuming that we did not trade up from the midnight opening price to take out some kind of a buy side liquidity. What we're doing is we're selling off, drifting lower from the opening price at midnight Eastern time. Go back through that little bit of 2 hour range and see if there's a SIBI in there. If there is, then what you're going to do is you're going to look for the high of that SIBI, the number 2 candle, and then you're going to anchor to that. And you're going to draw it down into what you think is reasonable as a low for a London session. You're not trying to get overzealous about it. You're not trying to get crazy with it, okay? Whatever has formed as the low for the midnight time opening price to whatever low has formed, there's your range. That's the entirety of the range, okay? All you're trying to do is overlap that entire range and then take the short-term sell side that would be right below that. And that's your target you get out of that. If you put your fib to the high of the SIBI high, number 2 candle, draw it down to the lowest low that formed in those first 2 hours between midnight and 2 a.m. Eastern time, you're expected to see it to run through. Now, you can do 2 things with this. You can get that sell side. When it hits it, you're done, go to bed, do whatever you're going to do. Or leave one on for a runner to get all the way down as deep as you can into 4 a.m. to 5 a.m. Eastern time. Before 5 a.m., close. Take your profits. There's 2 approaches to doing that, but the caveat is what we do at midnight. It got to be bearish on the daily. Everything I just said, if we're bullish and you think price is going to go higher on the daily, just reverse everything I said as it relates to the intraday. But you're just simply looking for a range to overlap. Now, if you're going to be using new week opening gaps and new day opening gaps, you have to have 2 of them in agreement, one above, one below where market price is, at the beginning of 2 a.m. Eastern time. So now you're in the London session. If you're bearish, you're going to find the first new day opening gap and look back, or new week opening gap and look back. In other words, going through your 5 weeks or 5 individual days of new day opening gaps. It could be regular trading hours opening range gaps, if that's what you're going to use. There's several ways to do this, and I'll be building on this idea this entirety of this week. But you're looking for some kind of inefficiency above price, at market price, and below it. So that way, there's your little canvas that you're operating in. And if it trades up into the higher version of that inefficiency you're looking for, and we'll just say, for the sake of argument, it's the most closest proximity new day opening gap to wherever the market price is at 2 a.m. Eastern time. While you're bearish, if it trades up to the new day opening gap low, and sells off, you can frame the inversion fair value gap that runs right up into that inefficiency above price that you're watching go up to. So it's creating a little tiny little Judas swing. And then you're going to anchor to the high of that inversion fair value gap and draw it down to the high of the lower day opening gap. So what you're doing is you're like connecting two specific PD arrays with the expectation that's going up to go down. And by grading that range, you'll be able to see by putting the octants on and the quadrants on, wait for price to get to these levels, and it creates a order block, fair value gap, a wick, consequent encroachment, all of these things, a breaker, all the PD arrays that they have to lay on these key levels, the octant or quadrant, while you're right in your expectation of where price is going to draw to. If you're not good at determining where price is going to go, this is why I tell you that's the first lesson you have to learn. Get good with that. Get really good with it. And you may start off with using new day opening gaps and you think, I don't have any consistency with that. Not because it doesn't work, it's just you haven't spent enough time doing it. Then go to new week opening gaps. Go to retracting opening range gaps, like I showed this week. By having these levels indicated, you can get an entire canvas of price action, and then how you're going to navigate in there when you're bullish or bearish, it makes it a whole lot easier. But you have to determine how you're going to arrive at what PD array you're going to anchor from, whether it's the new week opening gap, new day opening gap, or trading hours opening range gap. That part's up to you. But it's all based on how you're going to trade with that bias, if it's bullish or bearish. There's no secret, and I get a lot of these kind of little comments to me on TradingView. People will send me emails, and the whole entire message will be written in the subject matter of the email. Can you just show me how to get to the bias? Because I know if I get the bias right, everything makes sense and it's easy to do. Though that's the part you have to figure out. Like you have to arrive at whether you're bullish or bearish. And I'm already telling you what I'm expecting. So that should be the easiest thing. You just borrow my experience. That's why I give it to you. Borrow that part of it. Your model, you do whatever you want to do with after that. But if I tell you where I think the draw on liquidity is going to be, whether you're trading the CFD market or whether you're trading the actual futures market. Now, since you're outside the States and you're trading with the CFD, all you have to do is look at a futures contract chart like I'm saying, I'm following, and then lay your CFD chart next to it. Time and price, you pick the same candle, whatever that candle is and whatever the price is for the CFD chart that you're trading, that's what you work with. You can't use the same levels that the futures contract is going to offer because they're not marked to market in the same price. It has entire different, price structure, not structure, but price valuation. They're not going to agree in the same price. So like SP 500 or I don't what's the symbol? I don't trade CFDs. What's the symbol for the S&P 500?
It's SPX
US
500.
500.
Yeah,
Yes,
US
yes,
500.
500. Yes, 500. Yes.
Okay. So if you're comparing that with the S&P September contract, we're looking at a 1 minute chart. The analysis, obviously, I'm sharing in the opinion is anchored to the futures contract price. So whenever I'm looking at a very specific element around the futures contract analysis, candlestick price, candlestick time, the time frame I'm talking about it, find the equivalent of that very thing in the CFD market at the same time frame that I'm referring to it in the futures. And then do all your measurements based on the CFD price action. It isn't going to be as pristine. It's not going to be perfect like that, but still do it there, but rely on the analysis more. Be heavy handed with the trust on the future side of it. So what does that mean? Let's assume for a moment that you're bullish. And I said, I think it's going to go to a relative equal high. We had a nice discount opening in the trading hours opening session at 9:30 Eastern time. It's a Tuesday. The market trades down, takes out relative equal lows in overnight trading. So that's washed out. So now it's free to go up. If your CFD market goes up a little bit and then it's not reaching the target mark to market that would be seen in the futures contract price action, but eventually that the futures contract does trade up there, I would not continuously hold with the expectation that the CFD market continue to be overly bullish, because sometimes it just runs out of momentum simply because of the futures contract not wanting to go any higher. So your analysis is going to be heavily leaning on what the futures contract price action is and its individual market structure than that of the CFD. But you have to trade in the CFD market because you're not a U.S. citizen and it's the only thing you have available. So what you're end up having to do is, instead of hanging for that last little run that would be expected because of the analysis on the futures market, you'll have to be a little bit more content with getting out earlier in the CFD market. Don't expect it to be so perfectly delivered in the CFD market. So if you think that the range is going to offer in the futures market, say 80 handles, get 50, 55 at max in the CFD markets you're trading and just be content with that. Don't demand precision because they're not going to be marked perfectly. Does that make sense?
Yes, sir. Thank you very much. I totally understand you.
I think the lectures I'm going to give this week will help, because I'll be more inspired now because we had our conversation to like bring in the facets, details, and quirkiness of the CFD market traders that are outside the states versus the futures markets the traders that can trade the U.S. futures market. So whatever your other questions were, you're just going to have to hold on to them until we do it next time, because I might end up answering it by the lectures this week.
All right. Thank you, Michael. Thank you very much, sir.
You're very welcome. Have a good day.
Love that. Light XBT. Good job, buddy. Great way to inspire the CFD conversation, those variants within, and good details on your model. Keeping the conversation going, keeping it flowing. Hamoudi, you want to come up here next, buddy? Hamoudi?
Hello, hi, yeah.
Hello. A quick
Can you hear?
reintroduction of yourself, and pretty please stay on topic.
Yeah, so I'm from Qatar and my name is Mohammed. I'm 32 years old and I'm trading 4 years with the Michael Concepts. My question is, Michael, which PDRA we choose when we toggle settle and unsettle? Like if you see the daily chart now and they made suspension block, and if there is like volume imbalance and unsettled price and bigger volume imbalance and settle price, so we go for the bigger volume imbalance or the smaller volume imbalance?
I side with the one that has the volume imbalance that's more prominent, because what you're looking for is how far can this market color outside the lines. So if you're just using the smaller little volume imbalances, you're going to have those lines, because I've instructed you to do that and watch price action through that perspective. If you only use the smaller ones, and then when you drop down to a lower time frame, that little variance, that discrepancy between the volume imbalance is larger when toggled on or off. The larger one, if you're using that range with the larger one, you won't be tripped up or scared out of the idea or abandon your bias, because it's now moving beyond what you would have used if you had the smaller volume imbalance. That's the necessity of it. Or if there is no volume imbalance when it's toggled on or off, and when you do toggle it again, then the volume imbalances appear, I'm going to go with that one because it's showing a very small little discrepancy in price on that daily chart that's going to be conveyed and respected in the lower time frames.
All right, thank you.
You're very welcome, sir.
Good question, Hamoudi. We heard from Hamoudi, Light XBT. Now, Dodgy, you there?
Yo, what's going on?
How's it
Can you hear me?
going? We're going over yesterday's lecture. By chance, did you participate in yesterday's lecture? That's part of the pre-qualifications for today's discussion.
No, I just want to say hi because I haven't talked to you in a while.
Yeah, I know. I appreciate that. That's why I wanted to give you a speaker tag, and we will briefly say hi, but we are also going to get back to the classroom. So,
Okay, yeah, that's my bad. I just kind of wanted to say hi.
well,
And yeah.
there's rhyme and reason today. So,
Okay. I'm sorry about that.
it's all good, G. It's nice seeing you.
Yeah, Div told me you talked yesterday, so I just wanted to just follow up on that. But
I didn't hear what you said, buddy.
Div told me you guys talked yesterday.
Oh, yeah.
Yeah, that's
Yeah,
my guy,
that's
man.
your guy, right?
Yeah, that's my guy.
Yeah, well, we can have that. You and I can have that discussion
Yeah,
afterwards.
for
Yeah.
sure.
So I didn't agree with the Coors Light propaganda, but that's a different
Yeah, no, I
discussion
get
for
it.
another day. We don't need to talk about that here.
Yeah,
So
all right, get
anyway,
back to your class, man.
jump in my DMs, bro. We'll catch up there. I mean,
I got you. I
seriously.
got you.
I mean, holler at me. So,
Yes, sir.
all right, G. It's nice talking with you.
Yeah.
Hey, honey, what do we have for dinner tonight? Do you want to have that again? Oh, is that we're gonna watch a movie in the theater tonight? Oh, I'm sorry. We're getting back to this
Oh,
space here.
oh yeah, my bad. Oh, my bad. See, I knew I ran a risk with Dodgy, but at the same time, I mean, I still wanted to say hi. So, I mean, that's probably my bad. But anyway,
I'm just teasing you, man. Go ahead.
Market Oracle, I know is going to have a good question, a thoughtful question for today's discussion. Market Oracle, you're up, buddy.
What's up, Kate? Hi, Michael. Hi,
What's
Pipman.
up?
Hello, everyone. What's up? So, how you all doing? Okay, that's my elder one. You can hear him through the mic.
We're doing fantastic. I want to jump. We're in a zone here. I want to jump back into this. Let's go. Do you got a good question for us in regards to the chain of custody?
Yes, I have, but my elder one is. You can hear him crying through the mic.
Yes, you're
But
twins. Yes, I understand, and thank you for. I know you're being a dad too, buddy. So thanks for being here. We appreciate.
I'll ask a quick question, and then I'll listen to what Michael has to say through the recordings, and I would tell to my younger one. Is that all right?
Absolutely, buddy. I know you're wrestling. You're multitasking there. So go ahead.
Yes, I have two questions basically. And my first question is like in the core content, Michael, you mentioned about mitigation blocks and how price goes above to that mitigation block to basically to mitigate the orders of those who were long and now the market is going short. So my question is, why would price do that if it wants to go lower? Why would price want to give opportunity to those who are on the wrong side of the market to cover their losses?
Well, most
And
people
my
aren't
second
gonna. I'm sorry. Let me answer your first one because if you give me something else to think about, I'm gonna be not as helpful in answering the first one. So let me just answer this one quickly. When we look at the concept of mitigating drawdown, mitigating an offside position, okay, when I was teaching that idea, it wasn't that the market's saying, well, we're going to forgive you guys that are trading retail. We're just give you a chance to get out and not hurt you. Because I'm teaching you that the market cannibalizes that. We cannibalize the weaker handed traders, the less informed class of traders. That's the definition between the disparity between a smart money entity in the marketplace that's trading that cannibalizes less informed traders versus someone that doesn't think like I teach and how you guys are learning to trade, where we are looking for the victim. We're looking for the weakest of the herd, the easiest one, the least form of resistance or opposition to overcome and devour. Smart money, because they are positioning very large positions sometimes, and if there is an overshoot of price action and someone did not participate effectively or get off their position enough, like for instance, say it's been going up, it goes up, creates a high, trades lower, goes higher again. Okay, so we're seeing a potential bearish breaker form, but it's offset distribution for someone that is net long. Breakout traders are going to try to buy that previous high when it goes higher because they just assume it's a momentum. Momentum is the way things go. So let's be long on bullish momentum breakouts. We're not breakout traders. We punish those individuals that have that. But there may not have been the opportunity for smart money traders that are not using electronic script that follows a algorithm that trades for them. There's more of that going on today than it was, say, 10 years ago. Here we have a market that runs up while being bullish for a little while, but now it's turning. It runs out the last short-term high, and then it breaks aggressively. It validates that bearish breaker, and when it trades back up, that little bit of retracement back up will allow the traders that were not able to offset distribute their longs. They don't want to get it out while the market's at a deeper discount. They're going to allow that opportunity for them to come up to a higher premium but not change the structure that's now implementing a bearish sustained price run lower. So when price goes up to that bearish breaker, it's allowing smart money traders that did not have the nimbleness, that did not stay with the idea of bailing out when it went above the previous high. Maybe they got greedy. Maybe they held on a little bit too long. They wanted to see. There is no connection between the algorithm or price engine that creates these price runs, because it's not buying and selling pressure. There's no direct correlation or link to all smart money entities. There's large traders that you're never going to hear. They're never going to be interviewed. They're not going to be teaching anything. They don't want themselves known or identified. They're using these perspectives of price action because they know it's rigged. But they may not be allowed because of where they were watching price and wanting to be a little bit more greedy. I'll just wait for it to go there just a little bit more. But then the real displacement goes lower. Well, now they're forced. They got to bail, but they don't want to take it off while it's dropping. They know it's strongly in the realm of possibility for it to go back up into this bearish breaker. And that is the apparatus of mitigation. They're going to get out at a better, higher price, but they're not going to get the best yield because they didn't offset distribute their longs before the collapse at the higher high.
Thank you so much, sir. And I have another question. So when we are ascertaining whether this is a retracement or a reversal, when our higher time frame target has not been met, so our buy side or sell side has not been taken, and the price retraces, and sometimes
Okay,
that
stop for a second. You already gave me too many things to try to map out in my head. Give me a pantomime scenario of a market that's bullish or bearish, a specific, some kind of target that did not get hit yet. And that way it's easy for me to kind of like walk this through in my mind, and also for the people that are listening, because you had too many variables and I don't know how I could best answer that. So if you give me a specific criteria as an example.
Yes, sir. So let's say the market is bullish and we have a buy side liquidity above the marketplace. We run up to that, but do not touch it, or we are about 50% of the range still pending to the buy side compared to the previous range. Right? So in that range, the price starts retracing against our position. So how do we know that this is a retracement and not a reversal, that the price will take sell side first and then get to the buy side? So and what I am trying to do these days is I would see the order flow just like you teach, and I would look at every up close candles. One thing I have observed, that if we are in a reversal as opposed to retracement, every up close candle's opening price would be traded down to. And well, if we are in a retracement, it would not be so much. But if we are in a reversal, every up close candle's opening price would be traded down to, and ultimately the price falls off the hook and trades low. So my question is, am I right in ascertaining or reading price action in this way, or should I stick to how you teach about inversion fair value gaps and all these things?
Well, if you know where the market's likely to go, and we're going to go with your analogy that, say, the market's bullish and it's a relative equal high, and we'll just say it's 30,000 even for the sake of discussion. It makes it easy for me to describe it and everybody to follow along in the hypothetical discussion. We think it's going to go NASDAQ 30,000 even. Okay, and this is just me hypothetically talking. I'm not saying that's what I believe the market's going to do, but just for the discussion point of what you're asking and what I think what you're asking me, so I can help articulate what it is my response would be. The draw is 30,000 NASDAQ. It has traded from a point at which we were already bullish. The market has started running off of some kind of a discount array, and it has stalled a little bit. And you're asking, when do we know, or how can we know, if the market's retracing before getting to that 30,000 target, or if it's reversing? Is that what you're basically asking me?
Yes, sir.
Okay. By having your entire range that you're expected to see as the target or the draw, Okay, so 30,000. Let's assume that we got in and we're going to trade at 29,800. So we have 200 handles potentially that's not realized yet. We think very strongly that that 30,000 is going to happen. If we see that, for instance, say we drop down and it's in the opening range, AM session 9:30 opening, and we drop down first, and then we start to rally. If we start rallying and it's past or just past 10 o'clock Eastern time, we're on the other side of that first 30 minutes of opening range. So now whatever has happened in that first 30 minutes, if we're bullish, the Judas swing should have already formed. So if it's dropped lower, we got that on our favor. We have the relative equal highs that we're aiming for a hypothetical 30,000. We have 200 handles left to go. And whatever that short-term high was prior to the retracement that took place in the first 30 minutes or so, now we're in 10 o'clock. So we're in the part of the morning session where if it's going to continue, it's going to start running in a direction. It's not going to hem and haw, go sideways. And if it's a retracement, it should be short-lived. It should be very, very short-lived. And if you anchor whatever your lowest point is, that retracement during the first 30 minutes, to that relative equal high, that's your unrealized dealing range. So your octants and your quadrant levels on your fib. And then wait for price to run up there and form the PD arrays. Now, here's the part where you're asking, how do you know if it's going to reverse or if it's just a retracement? When you have the levels graded in that unrealized dealing range, you should see price overcome those levels and then start laying down discount arrays. For instance, let's say the midpoint equilibrium of that unrealized dealing range or consequent encroachment. If we are above that, the next octant above that, price should get above it or lay a bullish buy side imbalance, sell side inefficiency there because it's touching that next octant. So what we're going to then now do is watch and see, does price find some discount sensitivity when it trades down into that BISI? If that folds and it overlaps that and breaks down in there, that takes you right back to the equilibrium or consequent encroachment level where it needs to build a discount sensitivity to any PD array that would be viewed as an order block, an inversion fair value gap, or a bullish fair value gap. It needs to respond there. If it doesn't, and it goes lower, what is that indicating? Is that indicating for you, based on what you understand so far, would you think that is a continuation to go to the relative equal high target, or do you think it's now indicating it's likely to be reversing?
Market Oracle.
I couldn't understand the last line you said.
He would have said reversing.
Yeah. I was kind of like painting you into the corner with that. The point is this: what I'm teaching with the chain of custody and price action and looking at where these octants and these quadrant levels are, if you know where the market's likely to go, okay, the PD array should lay down like a string of pearls in a line that every time that it makes new ground higher when you're bullish, every discount PD array that would be used as something bullish, it needs to support price. If these start breaking, that's a classic sign that we're probably not going to continue and you're in jeopardy of seeing a potential reversal. So either take some of the trade off or abandon it and wait for another new entry to get back in sync with it, or just completely abandon it entirely and do nothing and just wait and see what happens. But by having this grading process of where you think the market's going to go, you're just simply waiting. You're not guessing. You're waiting to see if it creates the PD array at these octants and quadrant levels. There's no guesswork. It's just you're simply submitting yourself to time, waiting for this scenario to manifest in price action. It's either going to lay the PD arrays down or it's not. What do you think is going to happen if it starts doing things like a fair value gap forms, but it's not connected to an octant or a quadrant level, and then price is starting to drop back down into that fair value gap? Why would you reasonably expect that fair value gap to support price? Because it's not anchored to an octant or it's not anchored to a quadrant. but it starts to rip through it, tear through it, and then trades back up to it again, and then shows premium sensitivity there. And then the market starts to drift lower. That's an indication that we're likely to reverse, because what it's doing is doing things outside of what would be reasonable or algorithmic. So now you're potentially in a manual intervention. So the clarity of knowing what these octant and these quadrant levels are, because you know where your target is. It's not a gut feeling, I like this level because somebody else on the internet said this, and I just want to have something different, but I just want to see price get to that level. That's the number I like. There's a lot of that stuff happening in trading. A lot of people have these gut feelings, these hunches. I just like this price. Well, tell me technically why it's favorable to have that go there. And most of the time, they don't have anything except for it's just a level I like to see happen. So that's an opinion. The market doesn't care about our opinion. The market deals with finite terms, math, okay? And the math is derived around time and price. So if we're looking at price action and we're looking for it to behave a certain way, going higher or lower, we have to know to a certain degree, where is it likely to reach? It might go beyond that. But for you, for the trade, you have to have a minimum expectation of what's reasonable for you as you're model trading and what's likely to get traded to. Where did the move start? You don't have to be in at the moment it starts, but you have to be able to frame it that way. This is where the market started, the run. I'm bullish, and this is where I think it's going to go. This is the relative equal high, or this is the single high, swing high. Then you draw your fib up to that. And it grades that and shows you the quadrants and the octants. Then you're watching price action behave and march up. Every time it gets to one of these octant or quadrant levels, or consequent encroachment, the midpoint level, it needs to provide the proof, the absolute fact that what I teach is a PD array, it must form touching these levels. It has to be touching it. If it's not, then it's not real. But if the market starts behaving a certain way on levels that are not in agreement with the octant or the quadrant, you're probably watching manual intervention, or the market's probably going to go sideways and consolidate, do nothing. So these are all little telltale signs that by you studying, this is what I'm trying to encourage you to do, by having your perspective like this in hindsight, you collect all this information, you'll start seeing how fair value gaps are going to form. You're going to see when the order blocks are going to be forming. You'll anticipate at a general area where that price is going to be when the PDA forms, before it even gets there. Before it gets there, that's the luxury, that's the perks and the benefits of doing this, because not only are we forecasting price, but we are predicting, we're not anticipating, we're predicting exactly where my PD arrays form. And if it was anything like they say, it's a rebranded this, rebranded that. What you're saying is you're going to predict the lowest volume node before it gets there. You're predicting the point of control, which I have no respect for any of that stuff. The value area high, the value area low. I don't care about that stuff. I know how to pick a perfect range, and it need not rely on that stuff. So those are things that people react to. When price gets there, we're going to react this way. Usually it goes to volume area high, it's going to go down to the volume area low. That's a safe trade. Not all the time. Not all the time. This is an all the time thing. Where's the high? Where's the relative equal high? Are you bullish or are you bearish? You're going to derive that from the weekly and the daily chart. That's how you know if you're bullish or bearish. If you're telling me you're looking at a 1 minute chart and you're telling me that you're bullish or bearish because of what you see on a 1 minute chart, you're blind. You're giving me a unction. You're giving me an opinion, a gut feeling. Last time I had tennis elbow, the market went lower, and I got tennis elbow today. That's equivalent. You got to have something higher time frame, because the market's going to move based on a higher time frame premise, and it's going to drag itself across higher prices or lower prices to get to something that is laying right on that daily chart or weekly chart. And I don't care what school of thought you trade with. I don't care whatever it is and whoever it is. It is that simple, but you have to arrive at that bias. But once you have it, then you're looking for 2 points of reference, a discount and a premium. And the premium for bullish needs to be a single high, relative equal high, or a inefficiency that was not traded to, but we've dropped down from. There's nothing wrong with that. Use the low of that inefficiency. It could be a SIBI. It didn't trade up into that. Now you framed it. Okay. So now watching that 1 minute chart, you're not going to get every level give you a PD array, but the ones that form at an octant or a quadrant level, you can trust them. If they start failing, or if they start booking in a manner where it looks like it's creating fair value gaps, but it's not to an octant, do nothing. How's that hard logic? But people around the internet will say, well, this is too complicated. There's too many things. There's too many if it does that. That's life. You're driving to work. You don't know if there's going to be a car accident or a car stalled in the right-hand lane. And you want to be in the right-hand lane because your exit's right up the road. But now you got to fight to get around it. And nobody wants to let you over. So what are you going to do? I ain't going to work. I'm going to park the car and sit here all day. It's too complicated to get to work. I didn't have all these decisions in my mind when I first got out of bed. That's what it's like teaching these 3-year-olds on the internet, because they want their own way. And their own way is ignorance. So what I've done is I've created a language so that way you know where you want to see it go. You believe wholeheartedly that it's likely to go higher. You have to anchor it to some starting point that's beneath the target that's higher. And you don't have to be in when it first started. Many of you aren't going to be able to do that because you're still trying to find your way. But as long as you're entering at something at the midpoint or less between, say, the lower quadrant and the midpoint of the unrealized dealing range, that's a real nice sweet spot to enter in. You don't have to have the lowest low. There's nothing wrong with that. Many times I'm distracted with my wife, or now because we have a grandson, she's showing me FaceTime stuff on her phone, saying, look what he's doing here, blah, blah. And then the whole time the market's moving and I miss it. I'm like, oh, come on. I'm not saying it to her because she'll be like, what are you talking about? It's your grandson. But you know it is. I'm having to place myself in the position after it's rained a little bit. And you see people saying, well, why didn't you get in here? Because I'm a real person with real things going on around me. But the tools are still the same thing. The logic's still there. So these quadrants and these octant levels are going to help you differentiate whether there's sustainability in that price run you originally thought was going to happen. And if you start things that are not if you see things that are not characteristic with supporting the continued run higher, it's either going to go consolidation or a deeper retracement. And how do you know if it's a deeper retracement or if it's a complete reversal? Speed. Speed and how many PD arrays it knocks off. If it knocks off 3, it's a reversal. If it goes down 2 and it doesn't come down for the 3rd, and it's building support around some kind of a previous bullish array, and it wants to go higher off of that, and it starts showing a willingness to then jump and start creating long, elongated bullish candles, that's what you want to see. But the faster it leaves that lower quadrant and gets to the opposite side or north of when you're bullish, the midpoint level, the more optimal the level is that you're going to get that target that's reaching for. Those are perfect scenarios that you want to see those types of things. In between, you have a couple little gray areas, and I've covered them here tonight, or today rather, in regards to where do these PD arrays form on the octants, and are they supporting future price going higher when you're bullish or bearish?
Bang.
That was a real masterclass in order flow technique. In order flow, man, I'm deeply. I mean, I have no words. Let's just
Yeah,
say that.
that was he just dunked on you there. He just dunked on us. So yeah. Really no need to follow up on that question. Proxy's got his hand up. I got my boy Mauricio here. Mauricio, I saw the picture. Do you mind posting the picture into the purple pill for your question? We got Francisco here as well. So we'll be looking for a question, I believe, coming to the purple pill in image. So purple pill gone to recent. I believe we're gonna get Mauricio will post his picture.
Yeah, give me 1 second. I'm trying.
No problem, brother. I'll go to Francisco and come back to you. We finally got you up.
No
Don't,
problem.
I mean, you're,
I don't leave.
yes,
Don't worry.
please. All right. Hey, Francisco, jump up here, buddy.
Kit.
Hey guys, thanks for having me. Thanks for doing this spaces. This is awesome. So my question, I have two questions from the lesson. The first one is anchoring the unrealized range from the chain of command idea. We're anchoring to the top of the candle that has the inefficiency. And then we are anchoring it to, for example, in the lesson, to the sell side. So my question is, we're starting with the gap, right? And then ending with the sell side. For me, the sell side is a little tricky because like sometimes it's a little unclear on the chart which sell side to use. So, and if you answered this already, sorry, let me know. But that's kind of my question. Like, where do we anchor to when it comes to like buy side or sell side? Are we prioritizing like a daily high or low, or like a sell side that has more of a closeness? How they're sometimes really close to each other.
I can
So that's
give
my
you a very
question.
short list. These are like just the easiest generic little things that literally make it so stress free. Okay, I've taught it before. It's in several videos. It's in just about every discussion we've had in spaces, whether it be here or when I was doing spaces on an individual basis. You want to look at, obviously, and if you don't write this stuff down, you're literally wasting your time here. Okay, just look at the marker if you're driving, just see what time it is, and then come back to this minute marker and then listen to it and write it down. Okay. You want to know what the previous month high and low is. You want to know what the previous week high and low is. You want to know what the highest high and the lowest low in the last 3 days. Why 3 days? Because that's how a swing low forms, or a swing high. You want to know what yesterday's high and low was and what its midpoint is. Okay. So that would be like the middle of the range. So if we're bearish, we don't want to be seeing any movement above that midpoint once it breaks lower. So it's going to stay in the lower half of that range if we're really bearish. Same thing when you're bullish. Okay, so these are very key generic places you're going to look for PDA arrays, inefficiencies, or short-term highs and lows that are going to be session highs and lows. What's a session high and low? What's the highest high and the lowest low for the London session? Between 2 o'clock in the morning and 5 a.m. Eastern time. Very simple, okay? Inside of these sessions, like London, like Asia, like AM New York, like PM New York, the entirety of the 2-hour lunch window from 11:30 to the 1:30 Eastern time, that entire range, you want to know what the highest high and lowest low is there. Once you know what those highs and lows are for the session or during the lunch period, then inside of those sessions, you also want to look for where there's individual highs that are relatively equal or relatively equal lows, or singular highs that had a lot of momentum or animation away from it. Because it doesn't always equate to we look for relative equal highs or relative equal lows. And that's the only thing we do. It's the easiest thing to teach a new trader. But once you understand liquidity and you understand bias and where you're at, you don't need it to be a relative equal. It could be just a single high that had lots of animation where the market moved aggressively away from it, higher or lower. That's a key high or low. That's a very simple little idea list of where you're going to find anchor points. The PD arrays that form in the context of that, like a fair value gap or a breaker, you want to, when you're bearish, you want to use the lowest point of reference because you're not demanding that it goes higher up. We're not looking for it the same way we grade the sensitivity of, say for instance, I feel inclined to say this part, and I may be confusing you because you might be up to speed with what I said and think, oh, this is easy, but just allow me to say it. So I know there's somebody listening, they're like, okay, but would we do the same thing like we do when we're looking at the market that's bearish? And we have a sell side imbalance, buy side inefficiency, and the market goes up and then leaves it aggressively lower. You know how I teach that if we're bearish, we don't want to see a body left in the upper half now because we want to see premium sensitivity. That means the bodies can't get up in the upper half now, and it either touches the low, works some way in the lower half, then works lower. We're not applying that concept to determining our anchor points. We're looking for the lowest threshold when market price is below, and we are looking for something above us to anchor to draw down to a draw for liquidity that's either sell side on relative equal lows or singular low. You're looking for the easiest anchor point that's above you, whatever that PD array is, or the actual high or low, or in this case, it'd be the low of a session, a daily low, a weekly low, the low in the last 3 days, that type of thing. So you're not looking for it to stay in a specific range of that. It's a finite position in price, just like I anchored with that specific SIBI to do what I was doing the other day and actually executed on it. So it's not like just a theory I'm just trying to push on you. It's something I actually use. So that list of things, if you just look at that and you look for liquidity around those very specific generic times and conceptual ideas and do nothing else but that, I promise you, if you stick to that, you will be consistently able to find the next price runs and you'll never run out of setups. It'll never hide from you.
The chain of custody is mapping an unrealized range. That's what we are learning. Everyone, pretty please understand how to find, how to map, how to identify an unrealized dealing range. That's what Michael is teaching us. That's what this chain of custody is. And we are being shown and afforded opportunities with how you want to key off of, anchor, and measure these unrealized ranges.
That's awesome. I love how this is like the office hours. You get the lessons, and then this is like the office hours. It's great. Can I ask you one more question?
Sure, buddy.
Awesome. So I love regular trading hours gaps because they're an easy way to anchor during the session. It's like super easy to have a map and then go from there. Is there something similar for London? I strictly trade London. Is there something in London that I can use to kind of anchor myself like a map like that?
I just covered it with the first student that was asking me about London session.
Oh, cool.
It need not be like a gap. Just look at the opening price at midnight, and if we draw down into that to 2 o'clock in the morning Eastern time, that range is a very specific algorithmic range that you can use for grading. If you're bearish, it might go up in just the lower half of that and then dump. Or if it runs above it, takes out that high that formed at midnight, and then it breaks back down, then go back into that same range that was between midnight opening price down to the opening price at 2 a.m. Eastern. That's a very specific time-based range where you can go in and look for very hidden price action that's not even there yet, but you can anticipate it if then. So I may be bearish on, say, for instance, when I was trading Forex. I want to see the British pound behave in a certain way. I'm looking at the midnight opening price. I'm bearish. I want to see it go lower, but it goes down, and maybe I go in and I go short, and it just rips higher and stops me out. It's going to happen. Okay, we're all imperfect. Somebody's going to do something to manually intervene, and then boom, you did it wrong. Okay, it's user error, no problem. I'm not freaking out. My natural tendency is, okay, this is probably fake, and I'll be proven wrong in that regard in a matter of moments. If it comes right back into the range that formed between midnight opening price to 2 a.m. opening price, then I know that's highly probable that was just a Judas swing to knock out everybody that was already short, me included. Then I'm going to go into that same range between midnight opening price to 2 a.m. opening price while I'm bearish, while it just ran a Judas swing and took out the high that was formed after midnight Eastern time. Then I want to see, does the price start behaving around the octants and the quadrants of the range? I'm not anchoring to the highest high that just ran out the high that formed after midnight's opening. I don't care about that. That's the problem area. That's where the damage was done. Are you going to anchor? You're a rock climber, okay? Or you're descending from a rock climb. Are you going to go down the side of this cliff and say, okay, this rock just shifted and moved a little bit, but it stopped moving. This is a good place for me to anchor a tie down for my rope to anchor to so I can go down safely. Are you going to do that? I'm not. Nobody would. So what I'm looking for is I want to see where it starts to go back down in old range, well-traveled pathway, but it's going to be defined by that midnight opening price and 2 a.m.'s Eastern time price. So those 2 price points, that 2-hour window there, I'm going to look for the octants and the quadrant levels And then I'm going to wait for PD areas to form that are bearish right then and there. I'm going to ignore the Judas swing that stopped me out. I'm going to recalibrate my expectations that I'm bearish. I got burned. It's no problem. I'm going to go in with half the size I lost on, and I'm going to get it back with managing the position based on old information that was already in the price action. They just ran up and stopped me and everybody else that's already positioned. I have to submit myself to watch. Does it do what I want to see it do? If it's not doing, like I just talked with Market Oracle, the things I was teaching there in that before you came up, you're going to apply the same things there. You're going to be looking for PD arrays to form at the octant or the quadrant levels or consequent encroachment of the range between midnight opening price Eastern time and 2 a.m. Eastern time. As long as it's building PD arrays and it starts sending price lower and it's showing premium sensitivity, you're most likely on side to get some kind of a draw on liquidity going towards 4:30, 5 o'clock in the morning Eastern time.
Super cool. Well, thank you. Thank you so much, guys. And God
You're
bless.
very welcome.
Thank you.
Good questions.
Excellent question. Mauricio.
1240 kit.
Okay, yeah, that's
Hard
awesome.
extra. Okay.
We have Mauricio. If you just check the purple pill, he just posted it 8 minutes ago. It's under relevant. You should be able to just see it right there. His name and number 1 and then number 2. He has 2 pictures. And hopefully you can see him. Let me know you can see him, Michael, and we will open up the mic to Mauricio.
Give me 1 second.
Yeah.
I don't even see a purple pill.
Retro.
I don't see any.
Under
Yeah, I
the
don't see any.
comments.
I just see the microphone. Yeah, I don't see it.
Okay.
I
Well,
just see the
how about this?
microphone at the bottom. There's usually like a share tag thing.
Yeah, I'm gonna
heart thing.
retweet both of them because he did a great job numbering them. So see if maybe if you go to my page, Michael, and I just
Retweet it, and I'll
reposted.
look at it.
Yeah, I just reposted number 1 and number 2 from our boy Mauricio, and he's got a good question, I believe. And once you're aligned with the visual, then we'll proceed.
Give me a second.
I can hear Maru's kids in the background. They're like, Poppy, Poppy.
Sorry about that.
No need to apologize. It's adorable.
Give me a sec. Kit, drop it in the comment section for the stream.
Can you see the comments at all?
I got them to pop
Okay.
up now, but the last one I see is from Algo Trade.
Okay, do me a
7.
favor. There's relevant or recent, but if you just scroll down a little bit from that comments, you'll see 1 and 2, and you'll see Mauricio right there. If you got the purple pill up, it should be.
I don't.
I see Mohammed's. Hey, Mauricio.
Oh, okay. Hold on. I got something.
Okay.
I see Mauricio.
Yes.
Number 1.
Yes. He's got the weekly is 1 and then the daily is 2. So if you can see both of those, then I will open up the mic to Mauricio with his question. All right, Mauricio, you're up, brother.
Yep. Thank you.
All right. Thank you, Michael. Good morning, everyone.
Good morning.
And you. All right. So number 1, just to organize my thoughts, I usually go from the monthly to the weekly and the previous comment that you were saying that we have to mark previous month lows and previous month high. On Friday, we just swept the previous month low, and we tap into a monthly BC, and it happens to be also a weekly BC. And the number 2, it shows a new CB that we created on Friday with that closure, where we have 2 volume imbalances and the daily CB.
So what do we call that?
What do we call
when it has a volume? Your little CB that you have highlighted on chart number 2, it's in pink or red. What do we call that when there's a volume imbalance at the high and the volume imbalance at the low end? Suspension block.
Yep, suspension.
Okay. So my question to you, Michael, specifically on this scenario that we swept long term or higher time frame low, will you consider this suspension block be a three PDA raise, which will be in my case is as you thought us is after three PDA raise get disrespected, your
Your
butt
ass
is
is next.
basically next, correct?
Yeah.
So
Yeah.
we wouldn't want to, if we're bearish, we wouldn't want to have any type of closure, daily closure above the 50% of this suspension block.
No. Now watch. I'm going to explain this to you.
Thank you.
Since you have this on a daily chart, okay, look at the high of the suspension block at the low end of your CIBI that you have highlighted in chart number 2. Okay. The high of that's the highest part of that particular PD array, is it not? The
Yes.
volume imbalance. Okay.
Mhm.
So that's PD array number 1. We're not going to use the low of the CIBI portion that you have shaded in, that's the suspension block. In other words, the opening of the last candlestick that we traded down from that creates the low at its opening price, that lower volume imbalance. We're not using that low point or the open. That's not a PDA right here that we're going to trade with the filtering process of. We have to know what 3 levels are going to stay in forced or the trade probably is wrong. We have to go into the highest point at which that volume imbalance occurs, the forms, which is 2 candles back, the one that's created the candle number 2 or the suspension block. The lower volume imbalance high, that's PD array 1.
Mm-hmm.
Consequent encroachment, midpoint of that suspension block, is the second one.
The second one, okay.
The third is the highest level of the upper volume imbalance.
Perfect. All right. Amazing. That's what I wanted to reconfirm with you.
Yep, not a problem. Good question. Very good question, actually.
Yeah, that was very applicable to the last lecture too. I mean, referencing the daily and the weekly the way you did,
So
Mauricio, that
basically,
felt like an extension, actually.
just to confirm, so the stops of should be on that on the first volume, no, not the first, the last volume imbalance of the like around 29,250 whereabouts, correct? On that on the middle candle, on the third 3 bearish candles, the one on the middle, that top, that high, correct?
I don't follow what you just said. I'm trying to understand what you said.
If you were swinging and on this particular scenario, the stops for the bearish thesis should be the second candle high around 29,250, right? Because that
No, because the second candle high is actually higher than
than the volume
the
balance.
volume imbalance
Okay,
higher.
so at the higher the volume balance. Okay, all right.
In other words, the suspension block that you have highlighted in pink, the one
Mm-hmm.
that has the volume imbalance at the high, candlestick number 1's closing price basically is what I'm referring to, of that 3
Perfect.
bar pattern that creates the suspension
Okay.
block or CIBI.
Okay, great.
Yep.
Thank you.
Now, if you're short and you're swing trading it, that's your stop can't be lower than that. Your bias stays net short until that volume imbalance low gives up the ghost. Why? Because we went into lower lows. We went to the wick. What is that? Friday, Thursday, Wednesday, Tuesday, Monday. Last Friday's low. And then we have the first candle all the way to the left of your chart number 2, which is anchored at the 28,306.50 level. Or not, that's not the price actually. That's the close of Friday's. But that mid level that you have anchored with the little line on there, the little dotted line, that midpoint, little tan box, let's put it that way. It's already went down through 2 lows. And Thursday and last Friday's lows were relatively equal. Notice that?
Yes, at the monthly low, no less.
So
Right.
by going below those, we don't want to see any kind of aggression return back up to that higher volume imbalance. We don't want to see that at all. But for someone that is not already net short, you got to give it a little bit of opportunity to try to make a run back into those wicks from last Friday. It's permissible to go into that range in the lower half of it. It's permissible to go into the range of Thursday's wick and trade up into the low of the lower volume balance. It's a little unsettling if you're short because you don't like to see that give back a little bit. But new shorts, because we're opening up on a Sunday going into Monday's trading, it's not completely unrealistic or unreasonable for it to try to do that and still work going lower. So it's a matter of knowing what those three PD arrays are to change things for you. But for me to say, oh yeah, this gets short, you just put your stop loss at that volume imbalance high on the higher end of that suspension block that you have highlighted in pink, that's not what I'm saying. Either you're already positioned short in a swing trade or you wait for new information to get a new short.
Do we lose Michael?
No, I'm done
Uh,
talking.
Okay, no, my bad. I was like, okay. Okay, well, I look at I just, for what it's worth, Friday's price action. I look at the thought or the concept of liquidity depth and these higher time frames, and just personally, with nothing about nothing, but I just from a concept standpoint, I would want to see us trade to and through, and the concept of to and through, some type of relative equal would intuitively make sense to me, regardless of the chart, regardless of what it was, the concept. So that to me is what I would be looking at, anticipating with these if then statements going into next week.
It bodes well for continuation lower simply because we took out last Friday's low and we took out Thursday's low and we closed below that. It's further likely to continue going lower if we open beneath the midpoint of that shaded area you have in chart number 2. That midpoint, if we open down there, fill the gap, and then drop again, man, we could potentially see some really lower prices this week.
I mean, without knowing anything and just studying the concepts, that's I mean, not really needing, I don't think, a bias. Again, just trying to really understand the concepts. That's more or less what the chart appears to be representing. So we'll know further when we get an open and
Yes.
and the data that we collect after that with the NWOG and then midnight and then London and whatnot. So I just want to reiterate to folks, midnight to 2 a.m. It's not the first time today you are hearing it, but if you refer back to core content, mentorship 2016 2017 month 8, and you refer to a intraday protraction, episodes 2, episodes 3, when not to trade London, understanding the economic calendar, these schematics have been talked about at length, in depth, and Michael's touching on them again today in real time. But we're talking about the same schematics that he has already provided and is currently utilized within the community by folks. So a London intraday protraction, we had several folks ask about how to trade London. I'm a London-based trader, so I understand very clearly that model and what we're looking at midnight, and then the idea of a delayed protraction, which the schematics are referenced as Michael mentioned, midnight and 2 a.m. So you have a intraday London protraction and an intraday delayed London protraction. And this has just been talked about where and how you are going to be able to map these unrealized ranges. And then also for the new student, if I could go back in time, Michael has a series called If I Could Go Back in Time and When I Was 20, in which he also references previous months, previous weeks, previous days, highs and lows, and where and how you can anchor off of those prices very specifically to create your PD array matrix. Now you know you have quarters and octants. So I'm just trying to reiterate what's already been laid down, Michael, with what we're doing today in class. So
Yeah, the actual sessions, like for instance, when we're talking about London, the 2-hour window leading up to 2 a.m., that's like pre-session time before we get the regular trading hours opening at 9:30. So when we're watching price action machines, say 7 o'clock in the morning to 9 o'clock in the morning, your entire whole career as a trader could be encapsulated with just those 2 hours and never trade the volatility of the opening of regular trading hours opening. Never trade anything as in London. You just do your little business right there. For people that trade in London and you're scared of the volatility because there's big reports that usually come out, especially for a Forex trader. If you're fearful of that, you can do all of your trading in the first 2 hours between midnight and 2 a.m. you're going to leave a lot of things on the table, just like you would leave a lot of things in regular trading hours trading if you're going to trade pre-market session. But the caveat is this: when you're wrong about what you thought might happen and you've done your job and you do all your work between the 2 hours of pre-session, and I'll go over that in a second what they are, between midnight and 2 o'clock in the morning, and you can take your bag from the marketplace and go to bed, go do whatever you want to do. And if the market goes squirrely after 2 a.m. because of some news drivers that come out and it gets really just volatile and it's not really giving you anything you could have been making money on, or if you would have went back in, you would have lost money, that's a really good feeling. Like, it's a really good feeling of contentment. So you got 2 hours before London kicks off. So midnight to 2 o'clock in the morning, there's a sweet little spot in there where you can build your entire career, or wait for that setup that forms for the 2 o'clock session. It'll go up to go down, or go down to go up. 7 o'clock to 9 o'clock in the morning, that's your 2 hour window before the kickoff at 9:30 regular trading hours opening range. So our morning session. And what are we doing there? We're trading for 2 hours to 11:30. What's 11:30? That's the beginning of your 2 hour lunch window. That's that 2 hour marker of time before you get the PM session at 1:30. So at 1:30, you're getting that last bit of hurrah of the daily range. And everything works in this cycle. Everything's the same way. We open up at 6 o'clock, but Asia doesn't really get heated up until 8 o'clock. Between 8 o'clock and 10 o'clock, there's your nice moves for Asia. You don't think that's all pre-planned and scripted? Of course it is. But if you don't look at it that way and have this frame of mind when you're watching price action and anticipating it, not waiting to see it and then reacting, you've got to anticipate these things. If you don't have that mindset going in, you don't think this way, you're never going to see the setups form. You'll always be reacting. You'll always be finding something after the fact. Or I wish I would have saw this coming. I wish I would have knew this could have potentially be there. And that's what I'm trying to do. I'm trying to cultivate that mindset that there's very specific times of the day that are going to allow you to see things that are many times outside the spectrum of what the perception is seen in everybody else's school of thought as a trader.
Hey, can I ask a question from the lesson, Kit? Skip there. Hey, Michael, can you hear me?
Yes, sir, I can hear you.
Okay, sweet. So, back to the lesson question and picking the sell side or buy side, our target for the unrealized range. I did a little bit of back testing last night on it. And, with the octane levels, like, how do we know that we, like, picked the right octane? Because, like, I feel like in my back testing, I don't know if it was late for me, but I wasn't getting a lot of arrays that matched, the octane levels. So, like, I don't know, just that question of, like, if we pick the wrong one, like, how do we kind of stay on course? You know what I mean?
Well, how much time have you spent back testing and looking at price runs that already are static?
Mm-hmm.
Obviously, you see me doing it, and I'm executing in things that are happening live, real time, before they're there. That's experience. I know what I'm looking for. But my question to you is, how much time? Because I just started teaching it. So how much time could you reasonably say that you've brought? Right. So is it really a surprise that you're saying that you didn't do it right here and there when you've only had, 24 hours, 48 hours of time knowing about it?
No, for sure. And also, because I've also had that question with, like, picking, because I've had this issue before. I've had enough time to do the octans on regular trading hours, for example, and, like, some of them are super clean. Like, for example, last Monday's is, like, super nice octane levels that, like, PD arrays are, like, laid onto you, like you were saying, with pearls. So I don't know, I just wanted a little more guidance on, like, how do we know we're on course for doing the Unreal?
You just demonstrated it. Think about what you just said. You said, just like last Monday, it was perfect. Well, what are you seeing? You're seeing what I taught you should be there if you're going to entertain anything as a trade. But if you can't see it, if it's not manifesting in the range that you think you've defined, What does that tell you? Go in there and see what find out. No, you want to go. You want to go in and say, okay, I'm going to sit here and wait for more information, or let me see if I've got this really anchored properly. And it doesn't matter if you miss the lowest point when you're trying to be bullish or go long. It's okay to miss that move, especially if you're watching it in real time and you're just trying to play around and see if you can do it real time. That way you're testing the idea with unrealized dealing ranges, things that haven't materialized yet in price action. But none of you should have such a high degree of demanding it be accurate in your own hands because you just got taught. Nobody can go out there and just go, watch this, and just walk the market like that. But
well, do you like bull flags and bear flags?
We do, Patrick. We got some comic
Because
relief
I
here. What's going on,
say
buddy?
that, a fair value gap is created with the bull flag, creates a bull flag.
It does indeed, my friend. We do like bull flags here. How are you doing?
I do love a good bull flag out of a fair value gap. I won't lie. We get a good fair value gap pullback. I do like a bull flag out of it.
That's good. Do you like the bear flags too?
I'm more of a bull, to be honest. I like to believe in America.
That's good. I agree with you.
But, honestly, I do like the fair value gap. It makes sense. It's like an imbalance. Get the pullback, get the sweep, get the rip.
Wait, are you wearing glasses and are you proverbially pushing up at the nose as you say this?
No, I actually use the ICT concepts to find the bull flags now.
You are. If you need an indicator, if you'd like any assistance in seeing those things, my friend, I'm here for you. All right?
You have an indicator?
I have plenty of indicators that would just do overwhelming things for you and how you see price.
I like it. So you're thinking I'm going to see bull flags better. So a bull flag with a fair value gap is a better bull flag.
Maybe.
A high probability bear flag or bull flag forms after 10 o'clock. If you have determined where it's likely to go overnight, look at overnight between 2 o'clock and 5 o'clock in the morning. If there's relative equal highs to the left and you have an unction that you think the market's going to go higher, wait for the first 30 minutes to pass. As soon as we get into 10 o'clock, if it drops down into the first fair value gap that forms after 10 o'clock and then rallies, and then it creates a bull flag formation, then that's the ones that always work. And it'll go to those overnight relative equal highs. Anything else with a bull flag is bullshit.
No, I don't know about that because, bull flags, they clearly work more than anything out there.
I think if you pair him up the way he's mentioning, I think you got yourself a really good high probability trade, friend.
You got to have order flow, not the stuff that these other guys talk about. You have to have real order flow behind it.
What's order flow?
And then
it's how the candle bodies go above and beyond different fib levels. So order flow is going to be how from the lower time frame to the higher time frame, you're going to get an OHLC. So you're going to get bodies that are going to create large bodies, small wicks, or big wicks, small bodies, and the ability to read candles as they're printing in real time. The ratio between the body and the wick at specific fib levels is how we see order flow, Patrick.
Man, I just like boner candles. Big boner candles drive me crazy.
We like boner candles. I like Hulk dick candles. Who doesn't?
You call it a Hulk dick? That sounds a little freaky.
I don't know. You just called it a boner candle.
Well, that's not a Hulk dick. It's like a boner candle.
Okay. Big green, right? Big and green.
ICT, how often would you say the overnight high and the overnight low gets taken out during New York session?
80% of the time.
I like it. I like to, normally if we take out the overnight high and then we pull back, I like to target the overnight low, looking for that PD array, little instant, silver bullet in there. It always gets me excited.
Well, that type of situation is usually a CPI data release, PPI data release, FOMC day, or non-farm payroll, where it takes an overnight high and an overnight low, one or the other first. That's a two-stage delivery.
What do you think about the people that say you shouldn't trade on a no news Monday?
They're inexperienced.
I tell inexperienced traders that they should not trade on every Monday except for the week of non-farm payroll, because Monday is going to be pushed to have very likelihood of it's going to have clean price action because they know Thursday and Friday is going to be a shit show. So
I do I do love a good Mega Monday though.
Well,
Tomorrow I'm already fired up.
I mean, Mondays clearly when we look for the weekly distribution of price, we're always looking at what's coming out of Friday and then what's going into Monday, right? Just because of the orders, dark pools, where and how the market processes things between Friday evening and Monday or Sunday open, right? So the Asian session in Thursday and the London session on Monday end up being really, really good tells. And they also end up being very large ranges. Sometimes your entire weekly range is formed between Friday and Monday.
And that's interesting.
It's also factual.
Factual in the sense that it works?
No, I have 25 years of historical data that back up the statements I make.
I got 33 years of saying it works in real markets.
33 years?
Yes, sir.
Damn.
33. How old are you?
I've only been trading for 10 years, and I'm still trying to figure this out.
How old are you?
How old am I?
Yeah, what's your age?
37, sir.
Yeah, see, I mean,
Young
this
buck.
stuff,
I remember the bit. I remember those
born.
days, Patrick. I
Yeah.
remember those days.
At what point should I stop flying, do you think, ICT?
I don't know, but when you get it on good authority that you should never do it again, then you should listen to that.
If you ever have dreams with Kobe Bryant, my friend, I would suggest you decline that day's itinerary.
I would be in a helicopter before I planed.
Pilot, though. He's pretty good.
What's that?
I got a pretty good helicopter pilot. He's ex-military, flew medevacs. I don't know. He's pretty good.
I don't doubt that. I'm just saying, if you have any dreams or aberrations with Kobe Bryant, I would be careful.
It's true.
How's the Patrick? How's the racing going, bro?
Oh, it's good. Just got back from 3 days driving from Reno to Vegas. Me and my son just out there and enjoying life. We got some races coming up in Mexico soon.
What's your average speed in that professional truck of yours? What's the average? What's the average? I don't know, top speed, or how are you? How do you take corners and whatnot?
I mean, you can take a corner at like 60, 70 miles an hour. Depends on the angle of the corner. We have like every single corner. We know the speed. So my navigator's yelling out or talking about what the speed is for every corner.
So do you have pre-computed geometry? Are you looking at angles and whatnot? I'm sorry, I nerd out on math. So
it's like you got an angle from 1 to 5.
Okay.
And a 1 is like a 90 degree, and then a 5 is pretty open. You know.
Okay, so you go from the 90 degree to something far more, as you're saying, open, that angle. So
probably like 180 degrees, I guess.
Okay.
You know.
And like, what type of obstacles do you deal with? We have a few more minutes before Michael wraps up, but I am enjoying this conversation, and I've always wanted to know.
No, I mean, the last race that we raced in, there was a guy that actually died from heat exhaustion. So there's real life.
Dude, what you do is pure adrenaline, and clearly takes skill, and I mean respect. I mean, mad respect. I mean, I think it's pretty cool what you're doing, and I mean, you have to really be passionate for. I mean, speed, right? That adrenaline, I'm sure is. I'm sure you. I don't know. You kind of get off on that. I don't think that's a bad thing, but I'm just saying, like, you gotta be a junkie, right?
You get addicted to it for sure. It's kind of like winning trading, you know.
Absolutely.
The more you win, the more you want to trade.
Patrick, how do you say enough with trading? Curious. As someone who I mean, you're successful, you make a lot of money. What's enough? Is it 2R? Is it 1,000? Is it 4,000? Is it 20,000? How do you draw the line when it comes to a trade or a trade opportunity?
I think it really just comes down to the account that you're trading. If you're trading your own personal account, then you have your own rules. But if you're trading a prop firm account, there's no point in trading, past the consistency rule. So
fair enough. Okay, right on. So it's really just you managing the fund for what it is, and finding the expectations for said fund that you're managing.
It also comes down to each person. Some people can make $100 a day pretty consistently because that's like what their threshold is, and then maybe 1,000 for other people. It just depends, honestly. I tell people the best thing to do is just focus on not losing money, and then maybe one day you'll make some money.
I like it. I like the heartwarming, cool high five kind of Patrick, right? A
You know,
little
I've been
different than the WWE, you know,
got to
persona.
give the people what they want.
And
You
I
know,
appreciate that. I mean, we are on social media. It is entertainment at the end of the day, right? I understand that. I appreciate that.
I learned from the best, Michael Huddleston, baby, how to get the people talking.
I will say he's pretty good at that. And I think he's
Kayfabe.
provided a masterclass in that as well. So
Oh, I study it every day,
It's called kayfabe in wrestling. Got to be in character.
always.
and I will
I
say that's it's
almost had
done
it set up the
phenomenally. It's done phenomenally.
last year. It was so close. We almost had our moment. We could have been together.
Well, hey Patrick, we have run out of time. We have a
Okay.
pre-established shutdown at 12:45 out of respect. Mr. Michael Huddleston, thank you very much for today's mentorship. And I don't know if you had any final or closing words at all. And I would happily like to invite Patrick to the next Trader Roundup. We do this stuff all the
Yeah,
time.
hang out.
So, I mean, it's fun. I really do enjoy these conversations. So,
We had
I
some.
guess, you know, I would love, Michael, what would be if you're going to give one piece of advice really quickly to anybody out there who has never traded ICT or know about ICT, what's the one piece of advice?
To inspire them to pursue looking into it, or they're
Well, no, I mean, I just like if someone's like, hey, I want to learn ICT, like what's like what would be like a very kind of like simple answer to that?
pay attention to right now. That's my answer.
yeah. If they watch literally like last year, everything I've taught just this year, if they're on the fence about whether this stuff is made up or if it can't be done, this is kind of like this crash course that this is proof, because I'm calling things before it happens, then I'm executing on it. And not all of it's demo. Some of it's real count. And the bottom line is if you're going to learn from somebody, okay, unless they're able to tell you what they think is going to happen in price action with the principles that they're trying to say or kind of push forward as this is what I do. If they can't articulate using the same rules that they supposedly taught with, if they can't do that, there's probably a suspect person to listen to. So what I try to do is I give enough information so the rules are, you know what they are. You know, we're looking for a draw on liquidity. That's the first thing. The easiest one is relative equal high, relative equal low. Where you find them. I said it earlier. Session high, session low, previous day high and low, last 3 days high and low, last week high and low. If you just stick to those, you'll be fine. You'll never run out of setups. But then you have to know which one it's likely to go to. If you're heavy on the market and you think it's going to go lower, and the weekly chart and the daily chart suggests it's got reason to keep going lower because it's a low that it wants to go down to, or it's a gap down there it wants to get back to, then I'm going to stick with the narrative that I'm going to look for low prices, and I'm going to look for something that warrants me getting in. And if you can start with just those principles, those ideas in the beginning, and don't try to do silver bullet trades and don't try to do model 2022. You know, model 2022 is great, but you notice that the people that have made lots of money, millions of dollars, the highest paid out people in prop firm traded my model 2022. They're on record. The prop firms confirm it. It's fact. I don't think that model 2022 is the best place to start because there's things that are better understood for that model to work in your hands that comes through learning core content. So you got to be inspired to learn what it is I'm teaching. Because if you don't believe it, if you don't believe me, then don't go do something else. Because there's other people out there who have things that'll make you money. If you manage your money right, you can make money. You can flip a quarter and make money. But precision and consistency comes by way of knowing a lot of other things that support why price should do something. Going through core content, wonderful. Going through just the first 4 months of that in the playlist of 2016's playlist, just those 4 months, and it's not 4 videos, but it's 4 months of information. I'm convinced that if you just digested that and then plugged into the model 2022, then it'll work for you. But if you're just trying to do model 2022 playlist, I think it's like 40 videos, something like that. I don't know, to be honest, it's been a while. But if you just go into that, you're not going to have everything that you need. And if you have a couple losing trades because you don't know how to do it well yet, you'll talk yourself out of it. Whereas if you now understand liquidity, you understand about how, what you asked earlier, what's order flow? Simplest terms is this. If you think the market's going to go lower, try it. Okay, I'm not trying to say I'm your teacher, Pat, but just listen to what I'm going to say here. If you think, because I've watched a couple of your streams and you think that it's going to go down to a particular level, or it's going to go up to a particular level. If you believe that, watch the candlesticks. It's not just the fair value gap. Every down closed candle should act like a springboard to send price higher. Half of that candlestick body cannot be breached if you're bullish. It can go down and wick to it and go through it a little bit. Can't leave a body below the midpoint of a down closed candle when you're bullish.
Yeah, I feel the same
When
way.
you see a wick, okay, that's on the high end of the candlestick and price is bullish and we're going back down to that previous wick, you want to be seeing only price action, create the body or trade into the upper half of that wick. If it comes down to the full closure of that wick, then you got to look at the next, to the left, down close candle, because that's where it's likely to find the next point of sensitivity to go higher. That's just two easy reference points. If the students just simply look at those two primary functions of order flow that's seen visually, you don't have to go into level 2, you don't have to look at footprint. Everything in an open, high, low, close candlestick is going to tell you everything you need to know. You don't have to worry about number crunching, find out where value high and low is, how many orders were bought at this particular price. That's bullshit. You're spending way too much time looking at information that has really no bearing on why price is going to stop and go higher. Down close candles support higher prices, and wicks above candlesticks, half of that, the upper half, you want to see price only operate in that. If those two things are happening and they leave fair value gaps slightly open when they form, because they can go back down into them, but not fully closed. Those three characteristics or signatures are the strongest thing in my repertoire for watching order flow. When I sat out there and did live streams and I was saying, okay, you want to watch it do this and it shouldn't be doing that, I'm using just those three primary functions. And they're easy. Anybody can do that. Anybody can do it. But you can't do it when you first sit down and say, I'm going to do it because he said these are the rules. Because then you're going to be looking at little flutters in price, or it'll retrace a little bit further than you thought it was going to. And then you start questioning. Maybe this stuff doesn't work. Maybe it's all bullshit. Maybe it's this and that and the other thing. Instead of just simply going back through old runs in price action and see if those things are there. You'll see it real quick. And then watching it form in live price action when you know a draw. The easiest thing is overnight highs, overnight lows. Simple. It's simple as shit. But nobody wants to do those simple things. They don't want that. They want max payout. They want all the attention around the shit they sell instead of just getting out there and trying to make money.
Can I ask one serious question? How percentage of, so I know you talk about the ICT traders who got the record payouts. If we looked at the record payouts, how much of the trades do you think would actually fit into the ICT concepts versus just purely gambling?
Well, I think honestly, all of them were gambling. I mean, they're always over leveraging.
Because I can say with 100% fact that I know Jade Cap and Kane did not trade ICT concepts to get their biggest payouts. They just exploited a contract that got banned after a while because everybody was exploiting it because you could basically buy and sell. I think it was one of the one of the Forex contracts or something. It got banned. There was a whole thing about it, but I know for a fact that Jade Cap and Trader King did that.
Jade Cap trades a 1 hour FEG and he trades out of the Asian range. That is a very clear ICT schematic.
I do know for a fact that he exploited the.
No, you're right. I'm not here to argue what anyone else, whatever you're saying. What I'm here to say is, I mean, I'm friends with Jade Cap, and I already know how he trades. So he trades a 1 hour FEG. Yeah.
I just think
and then when you mention Kane, Kane trades premium and discount.
I can't hear what he's saying.
I'm sorry.
I know, but I think it's wrong to claim that the biggest payouts in history were because of ICT when clearly they were not. I mean, if we actually went to court and we subpoenaed documents, it would be proven that they were not trading. They were actually just exploiting the contracts.
Well, I don't know anything about any contracts you're talking about in exploitation, but when they're being interviewed by the people that paid them and they say they learned from ICT and they use these concepts to trade and they're actually still teaching them still today, what are you left with?
Yeah, I just think it's very disingenuous that Jade Cap claims he has the biggest payout in history because of ICT when he truly did not trade ICT to get that payout.
We'll invite Jade Cap up just like you came and he can speak for himself.
Yeah,
I don't think either one of us have to do that. Yeah, so if you want to speak on him and his business, then he can do that.
I can't defend him as far as what he did.
I just think there was more truth to this industry. That's all.
I don't see any reason why they would say they use my information because if I were them, I mean, Kane, I think he started doing it.
Michael?
No. No, because Kane tried to do it where he deleted all his videos off his YouTube channel because everybody's like, man, how'd you do it? And he would never come directly out there. And then when I can't remember the dude's name, what's the guy that does the Wisdom podcast? Wisdom.
Riz.
That's him. Yeah. He interviewed Kane, and Kane was like, "Yeah, I never watched anything. I watched one video talking about me. Watching one video of him, I can't watch that guy. You literally are doing their entire YouTube channel with Model 22. You can't just learn Model 2022 by one video. You can't do that.
Well, they can't sell the Discord and the mentorship if they give credit to you, Michael.
Well, Kane was trying to do it apart from that. I can respect that. I understand that. I didn't see it when it first happened. I congratulated when he got his payout. And then I saw all the bad mouthing and stuff, and I was like, okay, I'll just backpedal. I don't need to say anything else.
The idea is Kane and Jade, you're more than welcome to come up. This is
Sure, man.
recorded.
I think
Plenty
it'll
of
be
folks are
great.
going to hear it. And I think that it's a really good platform here for folks to speak for themselves. So if the conversations want to be had on other men's business, I'd prefer to have these other men talk about their own business.
It's not about the business. It's just
It is about the business. You just referenced two folks claiming something that wasn't true because you have insider information. Well, let them speak on their behaft. Okay, let them speak on their behalf, and you can have the conversation with them here.
I mean, Jay told me to my face that he exploited the contract.
Here's the thing. I know what you're talking about. That's the crazy thing. I know what you're talking about.
For the record, I don't know what you guys are talking about. So
I do because I've traded with Jade Cap. I've sat beside him, and I know exactly what Patrick is referencing. So it's none of my business, though, Patrick. Honestly, I'd much rather have my boy Kyle come up, which is literally a text message away. And he can come speak for himself, and you can have a conversation with him. I don't have to defend him.
I mean, he's not. I don't think he's gonna. I think he'll admit that he traded that contract. I don't think he's gonna lie.
I mean, he'll probably tell you that he trades a 1 hour FEG as well, and he looks for inversions, and he applies the same order flow concept that's articulated and taught in month 4. Month 4, episode 3.
Excuse me, Kit. Is it something that you can explain? Because I don't know what you're talking about when it comes to this contract.
It's an arbitrage from 1700
I'm asking him.
Yes.
Yeah, let me hear.
Go ahead, Patrick.
Yeah. So basically, there was a contract that you could basically buy and sell instantly, and you would make profit because there was like a spread because of the paper trade. With simulated prop firms, there was.
It had to do with the settlement price at 1700, Patrick.
Yeah, I mean, I never traded this. I never really knew. I just know that
I'm familiar with it. It has to do with the settlement, FX futures, and the 1700 price and the spread that is provided within the CME between the 1700 and 1800 open. There's an FX spread that occurs, and there's also ways in which, Jade Cap has shown where and how he has not, he wasn't supposed to make profit with this exact same rig or I don't know whatever you call whatever that is, this glitch that the prop firms had. He has a post in which he talks about it. I know that. Again, I'm intimately involved with this whole space, so I'm fully aware.
No, I know. I just think I wish that maybe there was like an actual ICT trader that got respect for actually trading it and not just two gurus who are now selling mentorships because of their
Patrick, I do it for free every day. A lot of people watch what I do.
How many people watch?
I don't know. Why don't you look at Twitter?
I never looked, to be honest.
A couple thousand I saw the other day.
Yeah,
that's cool. I mean, I got 4,500 to 5,000.
Bro, it's not about that. What it's about is you're asking, and I'm responding. If you'd like an ICT trader to represent that's trading live funds, that's capable of demonstrating a concept and reading live price and saying where the unanticipated range will occur before it occurs, I'm that guy, bro. Talk to me.
Okay, I mean, would you like to let's put $500,000 on the line and you prove it for a month trading?
I manage funds.
Oh, but so you can't trade.
I can trade.
So, okay, so $500,000, you trade for the month of August and you show the results in one account.
Why do I have to show you anything?
I know, but why is that always the answer? I trade live.
Because, bro, you know how easy it is for me to go to Grok and say fabricate trade results so that I can demonstrate something.
That I'm fabricating my results.
Did I say you were? I'm saying how easy it is. And what you're asking is I need to prove with money that I know how to articulate these prices and where they go. I promise you, anyone that watches my live stream, Patrick.
You seem very upset right now.
I'm not upset, bro.
Why are you yelling?
Can I ask something if there is chance, please?
Yeah,
No,
go for it.
Hamudi. Sit down. Sit down.
I don't know, man. I just think this whole industry is fucked because everybody thinks that they can get rich trading, and the truth is, most people will never get rich trading.
But that's what we talk about here.
Yeah, I know.
No one is eluding anything fictitious. No
Yeah,
one's
but you
trying
can't
to
actually trade
demonstrate
any
P&Ls.
shit.
Here's the thing, bro. In all honesty, each and every person's trading journey is their own trading journey. And whether you want to partake in a competition or whether you want to demonstrate how much money you can make from the market, can you show up every day and solve for X? And that
Yeah,
question is can you say this is where I would buy and this is where I would sell? Whether
Yeah, I
you
trade
buy and
live every
sell
day on
there,
YouTube. I trade
what
live every day on
and
YouTube.
I do it live on Twitter.
I
Congratulations.
know what I'm saying. Like I trade every day live.
So do
I mean,
I.
what am
So do I.
hiding?
Whoop de fucking do.
I mean, you're very upset right now. I'm not upset.
I'm not upset, bro. I'm not
I can
upset at all.
It's all good. Like I said, $500,000 to prove it, but you won't do it. So
It's
all
not
good.
a question of whether I need to pony up 500K to prove anything to anybody. Watch the live stream. Watch it be done live, Patrick. Watch it be done live. No money needs to transpire.
Dude, if you could trade live for a month and show all your entries and exits and prove it.
Put it in an account. I'll trade your 500K. We'll donate it.
Okay, perfect.
All right. I'll trade your 500K. Put it in the account. Give me the login.
I'm excited.
Me too.
I'll be in touch.
Sounds good. I'm in Edge Clear. If you want to have dinner, let me know.
Michael to pay me the 500, but I'll get.
I told you to
Why don't we squash that? Why don't we squash that right now?
I told you to escrow it. You didn't have the money back then.
I know.
Yeah,
but
squash
Michael,
that right now, bro.
100,000.
Squash that right now, Patrick. Right?
I mean, the squash is that I put the bet out there, and Michael said he was going to win the Robbins Cup, and he never won the Robbins Cup.
I got more traction. I got more traction from flubbing that thing. You can contact Joel, okay, and you'll see.
Who?
Joel, the guy.
Robinson.
Yeah.
He kept calling me trying to get me to do
Robbins.
The Robbins Cup. Yeah.
They'll tell you. All I did was sit there and I hammered it. There was no buying and selling of anything. It was like there's no rhyme and reason. I just shot it.
Why did you hammer it for?
I'm sorry?
Why did you hammer it?
Because I get more traction from people talking about why I couldn't do that when I literally win this Robbins Cup just by what I show. Do everything. I'm literally showing the examples. I'm executing. I'm showing the old trades. When I scroll back, it's all the same shit. The lady that's in the first spot right now.
The Robbins Cup and prove for once and for all that you can trade.
I will. But Patrick, here's what you should do. Okay, here's what you should do.
What would you like me to do, Michael?
Save your $500,000 and that kind of stuff. That's not even a lot of money. That's an April.
It's not.
That's April. Okay.
How much money do you have, Michael?
That's April. Okay. That was April this year.
What'd you make? You made $500,000 in April?
$600,000 just in April.
In trading or in from
Yeah,
work?
baby, I'm in there. I have fun with all this shit.
Would you ever show results, Michael, or no?
Sure, I show results every day.
What
results? Listen, I know it's hard for you to believe. And you think that you're a little bit of influence.
I know, but if you say you can do it, why not just prove it?
I'm going to.
Bro, you don't pay attention though, Patrick? You don't see him doing it?
I trade live every day. And I don't
but bro, you saying you trade live every day means nothing.
I actually fade you.
Nothing.
Most of the time, I got your stream on, and I'm fading you.
You say you're talking to two live streamers that you trade live. So that conversation is neutralized. You trade live every day, so do I.
I don't know. I just don't understand why not trade live.
So if folks like your stream, it's because they're making money. If folks like my stream, it's because they're making money.
Yeah, maybe.
Okay, so
here's a suggestion.
You get a lot of followers on YouTube. I get a lot of followers on X. I think there's a reason why people like watching us stream. And there's no reason to be disrespectful about that.
The majority of your followers are uneducated Africans, but I'm not pointing fingers.
Come on.
Okay.
Come on, man.
I mean, that is the truth. I mean, they are.
I don't know how true that is. That sounds racist, but
if we looked at ICT's followers,
but bro, most of your followers are bots, then, right?
I mean, maybe, but they're not African, at least.
If you stop giving out giveaways, if you stop doing that, your numbers would deplete immediately.
Okay, how about this? I won't run a giveaway for the whole month of August. and let's see what happens.
What's that have to do with anything, though, bro?
He just said my numbers are depleted.
Because, but you can pay for your numbers on YouTube, bro. Let's not pretend.
I know, but I can show you the commissions.
So you can literally completely falsify your entire identity online, and you don't think we know that?
I know, but do you? Okay,
I'm not. Listen, Pat.
Let me present this one fact. Let me present one fact.
Go ahead.
All right. If I make over $1 million a month as an affiliate, do you think that's because I have bots, or is that because real people watch me?
That's real transactions.
You've accumulated over the last 4 years a residual in which you have acquired a large equity stake in these prop firms. Good for you. That has nothing, bro. You can't say the amount of money that you make does not equal equity.
What does that mean? Equal equity?
What does that mean? Is you get residual payments every month, regardless. On every reset and blow up, you're making money.
No,
yes, you do. You don't only make money on new signups. That's not how this industry works, bro. Come on.
Yes, it is. Look up Take
No, it's
Profit
not.
Trader.
No, it's not. Apex is still paying residuals to you from 4 years ago. Four years ago.
Do you want it? Do you want to put? I'll show you.
Invite homeboy to the conversation, bro. Bring up your Apex CEO. Post your receipts. Show the fact that you're making this from trading, not from affiliate commission.
I personally don't give a shit.
I wasn't an affiliate.
Like I don't care.
For 4 years ago, I was an affiliate for Top Step, so yeah, that would cancel that out. So
22 to 23, your story's been very clear. 22 to 23, we know it. We know it.
Yeah.
So, I mean, and dude, respectfully, I got no issues with it. You're making money. You've defined and pioneered the futures prop industry. You are a huge player within that game, a single name involved in a firmed space. You've created that influence and that power. Good for you. That doesn't mean you know how to fucking trade. It means you don't care because you're rich. You understand the difference. Not caring because you're rich does not mean you know how to trade.
So you're saying I don't know how to trade?
No, what I'm saying is all of these receipts that you are posting have nothing to do with whether you can trade. There's no demonstration because I trade live or because you post prop payouts that you know what you're doing. You're blowing up like anyone else.
I traded a live account for a month and showed $100,000 profit, but I guess that's also fake.
It is fake, bro. Nothing on the internet is real. Nothing.
But why would that be fake?
Because you profit off of it being whatever it is. Your entire entity is built off being an influencer.
It was a live account though, sir.
That's awesome.
The first thing that comes to mind is as you said, it was just 1 month. And someone has been trading with real money. They want to see a 1099B. And that's like the defining moment where the conversation usually abruptly ends. So look,
I mean, I can show it. I haven't traded a live account for
Patrick. You're a multi-millionaire, brother.
Why do you feel the need that you got to do it though? Like when I watch you, okay, and you gave me some shit. I sent you an email. I said, listen, when you show your vulnerability, and only you and I saw this fucking email, okay? I didn't share it with everybody else. I said, when you showed your vulnerability, and you're saying this shit's hard, and you teared up and shit. And ain't nothing wrong with that. I've done it many times. Man. It's emotional. You're so passionate about trying to do something and you pour everything into it and you hit a brick wall sometimes. That's how you were when you first started. And that's why I gave you attention. That's why I fucking put eyes on you. I didn't say I made you, but I was giving you attention because you were being raw and real. And now, because of the money you're making with the affiliate stuff, I don't give a fuck what you make, dude. And honestly, most people don't. We really don't. When you lose that rawness, where you're approachable, where you're the most toxic individual with the highest degree of recognition in prop. When people talk about prop firms, no matter what, your name's going to come up in their head. They're going to know you. You have presented yourself as the kingpin of prop firm trading. You're it. That's it. But you abuse that and you talk down to everybody else and you think that that's some kind of a warring thing to be like, I'm strong because I do that. When people with real money, when we see that stuff, it's like, this is not really good.
You say we, like you have money?
I have shit tons of money. I have silly fucking money. I don't care what you believe. I don't care what you believe.
Why?
The point
Can
is
you
this.
real quickly?
Go ahead.
Can you explain why you don't trade real money?
Who says I don't trade real money?
You've said that multiple times.
I
You
just
you
said I
can't
fucking
trade
trade real money in
bullshit.
this. I said it today. I did. I
You
trade
don't
real
trade
money.
real money, Michael. Come on.
Sit down.
Bro, with the audience that's here, you can't sit here be offering financial advice when you're trying to teach. You know this. And dude,
Oh, come on now,
Patrick,
kid. Why you being
Patrick,
funny? Why you
Patrick.
being funny, kid? I don't know. I mean, hey, it's all fun and games, right? Michael's gonna do what Michael's gonna do. I respect the grift. It just keeps on going for 10, 20 years now, and it'll keep on going. And hey, I'll keep getting rich and I'll
Not
keep
forever.
winning. And no, it'll keep going forever because you'll say you're quitting, then you'll come back next year and you'll come out with a new model, and it'll always be some kind of bullshit, and you'll never prove it. And everybody will suck on your little dick because they're African and they're broke. So hey, it's all good, you know.
Oh, and more folks will come up and we'll do it live and we'll trade live. Hey, I do it live. So do I.
And get their payouts and show their
Yeah.
record and show their interviews where
Do it
people say, "What are you
live every
trading with?" Oh, I'm
day.
trading with ICT.
It's
Why not
Stuff.
do it
recorded.
live? Why not do it live? Because last
It's
time Michael did it
recorded.
live, he
It's
got clapped.
recorded, bro.
Got
It's
clapped.
recorded
He got
live.
clapped.
I get what?
Oh.
What did you say? I can't hear you because Kit was talking.
Remember
What'd
when
you say?
you traded live? There's a video of it where you traded live and you kept losing because you said the market makers were moving the market to your stop loss.
You don't know when I'm you don't have no idea when I'm trolling, do you? Like, I have a dry sense of humor, man. I have a very dry sense of humor. Where are you at?
And Patrick, I know
Stop, Kit, just
you're.
for a second. What do you have to say? What do you have to say for the last 6 weeks where I've called every fucking thing that's happened in the marketplace and executed on it? Show
He
me
hasn't
that.
paid attention.
Why don't you talk about
Why
those
not trade
things?
real money?
What are you talking about? I'm literally
Michael,
talking about
you can't do it live to save your life.
live to me is I'm in
Business, you can't
regulated
trade
broker.
live to save your
It's
life.
done live, brother. He
He
defined
don't do
live.
it live. He don't do it live. He
Come
cannot
on.
enter and exit trades live on
Come
YouTube.
on.
He can't do it. It's impossible for him. He freezes up. He panics.
No, I don't.
He gets scared.
I've done it before. Go
He
on
gets
my channel, you'll see it.
Do it this week. You won't.
Here's what I want you to do.
Prove
Okay.
to the world that you can day trade, Michael.
What?
Come on.
No, prove to who?
Yeah.
The world.
The world is the world that between your ears, my friend, because you're the only naysayer here.
I know. I'm the only person in the whole world that thinks that Michael is full of shit.
I
But
know.
hey, it is
No, there's a
what
lot
it
of people.
is.
I love it because
Right?
that keeps people. You get some charged. The people that seen me do it, they know for a fact they've seen it. And you got these people, these outliers that come in, and people
Nobody's
like you
seen
that
it, though.
stimulate it.
Literally, nobody's
It's
seen it
the
ever.
hardest thing in the world to do.
No
Right?
one's ever seen it.
It's clearly the hardest thing to do in the world. And what's crazy is
Hey,
I can
hey,
do it automatically.
Hold on one second. I just
Hey,
want
Patrick.
to say it is
Patrick.
now 10:15. So Michael went over by 30 minutes because I'm his fucking daddy. See you later.
No, I'm waiting for you to. I'm waiting for you to throw down a gauntlet that's worth talking about.
Dude,
Listen,
he
January's
left.
coming up, Pat.
He left.
He's listening. January's coming up, Pat. Okay, January's coming up. Keep your money, okay, because you're gonna fucking need it. I'm gonna wreck your shit in this prop firm industry, okay? I'm gonna keep it fucking going. It ain't going just 4 weeks. I got just about every company that's reached out to me and wanted to do this with me. They reached out to me, okay? They reached out to me. You had to sell your ass and beg for a dinner from these motherfuckers that have a partnership with you. All I had to do is say, you can use my 3 fucking letters. That means I own those fucking letters. And now they all want to stay locked tight to me. Period. So I'm going to take your fucking money from you there. If you want to give me $1 million in January for a full run, for a full fucking year, guess what? We're going to compare 1099Bs at the end of fucking 2027. And if I ain't 50 fucking times whatever you fucking do, I'll delete every fucking thing, drive my ass down to fucking wherever that bum fucking place you fucking live in Florida, and I will kiss your ass on live stream. How about that? Tongue first, right up in your fucking chocolate starfish, you little bitch. Come over here and give me your shit again, because I will embarrass your fucking big ass. Fucking clown.
Hey,
Dude,
it's been
you are
fun.
new
It's
money.
been fun, and it's been real.
No. No, I'm not done. Don't interrupt me.
My bad.
Coming here holding your dick in your hand and then saying some Mickey Mouse shit and then running away. That's the biggest cowardice shit I've ever fucking seen. Dude, I'm out here every fucking week telling you exactly what this market's gonna do. I made so much fucking money, you would shit and fall back in and roll around in that motherfucking shit. You will never see money like that. You will never see money like that. I don't need this fucking money. I'm giving it away. And you spent the entirety of this weekend. Your girlfriend probably doesn't know where the fuck you were. You probably stared at that fucking phone, worrying about me. Worrying about me instead of entertaining your family or your girlfriend. Think about that. Think about that. Is if you had real money, if you weren't threatened by me doing what I just fucking did, in one day I turned your whole fucking world upside down. And all I had to do is say, you can borrow my 3 letters and you don't have to pay me. That rocked your whole shit. Your whole fucking world's upside down. And every other affiliate is sitting there thinking, fuck, what am I going to do to compete against this fucking guy? Right. Because there is no fucking competition. I told you before, shut your bitch ass fucking mouth before I show you what's up. That's the facts. I played nice with you. I gave you a little bit of latitude, a little bit of fucking loose over here, run your mouth a little bit that. But all your money comes from affiliate. Who do you fucking think they want to deal with? These companies. They tolerate you. They tolerate you because you have the numbers. But your numbers are so easy to take, just like that, for a person like me. I haven't even started advertising. I haven't even advertised yet, and these fucking companies are telling me, we would like to extend this beyond 4 weeks. What does that fucking tell you? What's that fucking tell you, Patrick? It tells you exactly what you've been shitting the bed about all weekend long. Fuck. What if they start using this fucking guy's shit instead of mine? My whole shit's upside down. Yeah, it is. And all of this kind of stuff here, you don't understand. This kind of shit gives me a hard one. I'm rocked the fuck up right now because people like you go around talking down because your new money, that $500,000, dude, that's nothing. That is nothing money. That's shit money. Get the fuck out of here. You need people to view you like you're significant. And I'll give you this, buddy. When it comes to prop firms, you're significant. You earned your place in that. Your title is Mr. Prop Firm. You're it. Absolutely, you're it. But you motivate people like me, who has all the free time in the fucking world. All the free time in the world. In the kindest of fucking hearts. I let you have your fun. You play a little character. But I want you to taste what it's like if I want to just touch you and take your shit from you. I can walk up here and take your lunch money anytime I fucking want. And there ain't a fucking thing you or anybody else can do about it. Nothing. So keep talking your shit. I'm not hiding shit. You gonna go into a regulated broker? You pick the operating beginning balance. No Robbins Cup necessary. Absolutely a regulated broker. Every single date, live login, broker statement shown. Show the last 3 digits and the first digit. Everything else you can block out. But you have to record every execution like I do. And you're going to see, there ain't no cherry picking, motherfucker. I'm going to moonwalk on your fucking greasy ass all of 2027. And at the end of the year, a 1099, the number you ain't never fucking seen in your life. How about it? How about it? All you got to do is say, I'm in January by we'll say the 10th. Fund your fucking account by January 10th of 2027. Log in, do your recording, and then talk all the shit you want. All year long, talk all that shit. And I'm just going to show you the numbers every day. And the first time you shit the bed, If you lose 50% of your account, I'm done. So that means don't over leverage. Don't fuck up. If you tap out, done. Gentleman's handshake, I fucking told you so. Nobody can argue against these fucking these terms. Nobody can say anything about it. Get back to me in January. Otherwise, shut the fuck up, bitch.
$121. I like the time. It's going to be a mic drop moment right there. Have a good one.